In today's video, we're going to break down exactly how I made $703 in 2 minutes trading MNQ. Now, we're going to break this down from A to Z so you guys can actively start implementing it from today. You're going to have the full rule sets, the entry and exit criteria, the entry model, and the directional bias. Combine this all together, you have a full system with a few months of hard work. If you don't already trade a similar strategy, you will be able to implement this and start making money. So let's break it down. On the left-hand side, we have NQ. On the right-hand side, we have ES. What we're looking for is correlation and inverse correlation to help guide our trading decisions. Now, starting off, we need to break down the directional bias. We do this in a two-step protocol. One, we go to the 4-hour time frame. We mark out the 4-hour low and the 4-hour high of the previous candle. So let's do that. You only do this for NQ. So let's mark the low. Let's label this the 4-hour low. Then you're going to mark out the 4-hour high. If we sweep high, we're going to look to sell. If we sweep the low, we're going to look to buy. So in this instance, what have we done? We've swept the low, meaning we are bullish. Now, stage 2, this is important. We're going to mark out the closest bearish and bullish PD arrays. So we see here, we have a bearish fair value gap. All a PD array is, in my opinion, that I focus on, is an inversion or fair value gap. You're just going to mark out whichever one's closest. In this instance, it happens to be this bearish gap here. Now we need to do the same for the bullish scenario, which if we look to the left-hand sides, we have here a fair value gap that is bullish. We've got multiple short-term lows inside it, and price is trading relatively close to the CE. Relatively close to the CE, showing signs of bullish order flow. So let's drag this across. It's also with short-term lows inside a fair value gap. That's your best or one of the best liquidity pools, and it will act as a magnet on price to actively seek out, then actively reverse from. So do note that down. Now, in this instance, we have swept the low inside a bullish fair value gap. We are looking to take buy positions. Now, before we grade our directional bias A+, we now need to go to the 1 minute. So the 4-hour is A+, but the 1 minute needs to coincide with our directional bias, which you're going to mark out the 8:30 opening price, which is here. If we are beneath this price, we are in a discount, meaning we want to buy. If we are above it, we are in a premium. We want to sell. But this is not A+. We also need to do the same for the midnight opening price, which is this candle. So we do the same. It's the same thought process. If we are above this, we are in a discount. Sorry, if we're beneath this, we're in a discount. If we're above it, we are in a premium. Now, a super discount and a super premium would be to be beneath 8:30, the midnight. We swept the low inside a bullish gap. This is A+ directional bias to look for long positions. Now, before we jump in and discuss the trading model, we need to actually discuss the trading windows, as time plays a huge role in how I trade the markets. Now, the time frames that I trade on are macro windows. So this, fairly simple, it's just the first 15 minutes and last 15 minutes of particular hours. First, we have the AM macro, which is 9:45 to 10:15. So let's label it. So we have 9:45 till 10:15. This is the first AM macro, and this is the macro we're currently in. The second AM macro is 10:45 till 11:15. We're not going to label that as we're not in it. So there's your two macros. These are the main ones that we do trade. We also have pre-market macro. If we have red folder news, this validates 8:45 till 9:15. You see, it's relatively choppy. We did still take a position from a CE, but this was not A+. Very choppy. Don't recommend to do so. So going back to NQ. We also have PM as well before I jump on. PM session is 13:45 till 14:15. There's all your macros that you need to focus on to be successful. Now, entry model. In today's instance, we actually had a unicorn entry model, which is when you have a breaker paired up with a fair value gap. Now, a breaker in a bullish sense is the last up close candle. So let's highlight it. This is the last up close candle. This is our breaker, and you do actually use the series of candles, but for your entry, you're going to use the candle body. Okay, that's how I like to approach breaker entries anyway. But we're not going to take just a breaker unless we have SMT, which in this instance we do. We see here on ES, we have been, or we're in bearish order flow. So to take a reversal, we can't just enter without SMT. We're going to need price on NQ or ES, either one to take the low and ES to not take the low. So we see here, NQ has swept the low, ES made a higher high. So this is an inverse of the correlation. And in my opinion, ES is the stronger asset. So the SMT you want to focus on is when you're bullish, you want to see ES make higher highs. And when you're bearish, you want to see ES make lower lows, whilst NQ is taking the highs. These are the best SMTs. So even this now, we can grade this in A plus SMT. So A plus direction, A plus SMT. We are now ready to take a multitude of entry models. In this instance, it was a unicorn. So we see here, if we press play, the next candle did not hit the breaker, which I was actually about to enter on this anyway. But what have we done? These three candles on the third wick low and the first wick high, they've left an area of inefficiency. There's only buyers in this region. So what does price like to do? It likes to rebalance price before continuating in the right direction. So what did I do? I placed a limit almost perfectly directly on the breaker. Okay, on the breaker inside the fair value gap, price literally closed at my entry and then reversed to the take profit. But don't worry, we're going to break this down. So let's mark this out. Your entry is going to be off the breaker. We see that we overlap in the gap. Your stop loss placement. Now, for your stop loss, I use 5, 10, and 20 points. 20 points is my max stop loss. Now, you're going to have to do a bit of discretion as you go within your trading career for this system. 5 points is mainly going to be within the London session and very low probable days or low volume days. Very rare that I use 5 points. 10 points is a little bit more common, and you will decide between 10 and 20. Majority of the times in the first AM, you're going to be using 20 points. It's a little bit technical, but you can choose 10 points if the 10 points cover at least 50% of the breaker. So these candles, these series of candles are your breaker. We see this is the breaker low. Yes, we could potentially do 10 points, but what would that do? For one, it would mean that we have a stop inside the fair value gap. Two, we're not even beneath 50% of the breaker breaker CE. So this didn't make any sense to me. Even 20 was a little bit tight, but it was beneath the 50% of the CE. When we have strong bullish order flow, price should not come back down to the CE or trade anywhere beneath this. Now, in this instance, we're beneath the CE, beneath the fair value gap. I just placed it, accepted the risk to reward. So let's press play. Okay, price is pushing up. And then here. On this candle, we have now been entered. So for your exit criteria, we're going to go for a 1 to 2. And then the closest liquidity pool. So this can be short-term highs, so swing highs, equal highs, volume imbalances. A volume imbalance here in this instance was a difference between the close and the open of two candles. So in this instance, we closed higher and opened lower. This is a volume imbalance, and potentially we're going to see sellers enter from these regions, pushing price lower. not even taking the high out. So where did I target? I targeted here for a 2.5 risk to rewards. I secured 50% of my position at a 1-to-1, maybe even slightly bigger here, because you can see it happened almost instantaneously. We hit the take profit. I said 2 minutes. Well, technically I got entered and then the next minute. So kind of valid, but we secured 1.75 risk to rewards, netting me $700. So that's the trades. Any questions, do let me know down below. If you think I didn't explain anything completely correctly, let me know and we can expand upon it. This is a quick, simple video. I hope you guys have enjoyed. You can see my executions here. It is a fantastic, fantastic trade. So make sure you trade safe. It's very volatile. I'll leave a Telegram in the description below with my daily bias every single day. So if you're getting confused, join there. We're going to keep growing the whole of 2025. Thank you guys for watching.